So the webinar today is about the new AML CFT package in the European Union. It changes a lot, and our speakers are from a legal and an operational background. So from the legal side, we have Professor Andrea Minto, who is a professor of law and financial markets at Ca' Foscari in Venice, also a member of the European Banking Institute and of counsel at Annunziata Conso in Milan. And from the operational side, we have Dr. Vincenzo Scuderi, who is head of AML CFT at the Deutsche Bank Group. So I think we'll have as a format a kind of a free format of dialogue between all of us here. So if anyone has any questions, please feel free to write in the chat or just interrupt the speakers. I think that won't be a problem. So I'll leave the floor to Andrea, perhaps.
Yeah, Andrea.
Thank you.
Sure. Thank you very much. Thank you for having me. First of all, very happy to be here to discuss such a complex topic with you guys. So I share my screen. I prepared a presentation just to facilitate the discussion, and there it is. So I think you can see.
Yes, we can see it.
So, okay. So the idea is to start with an overview about where we stand today before entering into the new developments of the anti-money laundering regulatory framework in the European Union. So the legislation at the European Union level is characterized, has been always characterized by directives. Here, what you see is indeed that from 1991 with the first AML directive till the last one, the fifth, we had a series of acts, legislative acts that updated the matter, this topic, and in particular that brought, let's say, the current setup that is characterized by three pillars. The three pillars that probably you are all familiar with. So the fact that we have a first obligation that is the customer due diligence. So the obligation to know your customer, asking for identification, asking for the ultimate beneficial owner, asking for the purpose why the business relationship is established, and so on. A second obligation that is to keep the data that you're gonna collect through the relationship, the business relationship with the client. And the last pillar that is characterized by this obligation to report any suspicious transaction that you might become aware of during this business relationship. All those pillars, all those obligations apply to the list of obliged entities. Of course, as we know, obliged entities means the recipients, so all the entities and individuals, professionals as well, that are subject to the anti-money laundering requirements. As you can see in this slide, at the very bottom, there is a sort of a basis where I ask whether there is a sort of a third pillar represented by a cash limit. This is actually one of the big topics, the big issues concerning the effectiveness of anti-money laundering legislation, because as of today, the European legislation is not introducing an EU-wide cash limit, but it is up to member states, it is up to governments to possibly introduce this additional pillar. Why it's an additional pillar, why it is somehow associated with the other three? The answer is pretty obvious, because introducing cash limit, it is somehow channeling all the transactions through the obliged entities. Therefore, all the transactions are passed through all the entities that are subject to anti-money laundering legislation. The current regulatory framework is based on... Sorry? The current regulatory framework is based on basically a couple of pieces of legislation, a directive, that is the so-called fourth directive, Directive 2015/8049, where we find indeed all the anti-money laundering requirements, all the anti-money laundering obligations, and basically the three pillars have been briefly discussing before. And this fourth directive has been relatively recently updated by the fifth. So the second piece of legislation that you see here, Directive 2018-843, is a directive that is not repealing the fourth, but is simply updating the fourth, that is the one in force today, in particular strengthening certain, say, parts of the overall regulatory framework, and in particular introducing certain rules concerning the crypto asset ecosystem. So introducing the definition of virtual currency and also expanding the list of obliged entities also to cover wallet providers and crypto exchanges. And then the last piece of legislation that you see here, that it is part of the current regulatory framework, is this regulation on information accompanying the transfer of funds. Is a regulation that was in place from 2015. So it's a regulation, and as such, as you know, is a tool of maximum harmonization. This regulation has been recasted, has been updated, repealed by a new regulation of 2023, which is actually one of the four initiatives of the big reform we're going to talk about. And this regulation has been updating the previous one by expanding the scope of application of this regulation on the transfer of information, not only to the transfer of funds, but also to the transfer of crypto assets. So it's, again, as you can see, as you can appreciate, the last updates of the anti-money laundering legislation, in particular the one of the fifth directive and the update of the transfer of fund regulation, have been justified by the challenges brought up by innovation and in particular by crypto assets. Of course, the characteristic, the features of such regulatory framework are that we live in a situation where every member state has a lot of discretion in implementing the directive. As you know, the directive is creating an obligation not directly on market players, on individuals and on entities, but on member states to transpose the content of the directive into the national jurisdiction, therefore opening up venues for leeway and differences, which brought the European Commission in a couple of occasions in 2019 and 2020 to point out the problem of fragmentation. Why? Because, of course, we have every member state, but also every national competent authority applying the anti-money laundering legislation in different fashions, creating, again, room for regulatory arbitrage, room for, in general, for criminals to circumvent the legislation and find opportunities to launder money more easily. In light of that, so in light of those loopholes, discrepancies, and generally speaking, fragmentation, both from a regulatory perspective and supervisory perspective, in light of those, the European Commission said, we need to put out the fire. We need to do something. And in this respect, before going to the AML package, so into the reform, I pass the floor to my colleague, to Vincenzo, to discuss further in details the problems of the current regulatory framework.
Okay, thank you very much, Andrea. Thomas, could you share the screen, please, for me, my presentation? Thomas?
Sorry, I lost.
Sorry? Could you hear me?
I
think he has some problems with connection.
Some problem. Yeah, some problem with the connection.
So, Vincenzo, we don't have your presentation for now. Maybe you could start by just giving us a little bit of a give us an overview, and Thomas will catch up.
Okay. just first of all, many thanks for joining this webinar, this audience, and many thanks for inviting me to this webinar. Today, as already said, we'll try to present the new EU framework in anti-money laundering space. And to be honest, 1 hour is really challenging. Basically, the new AML framework will be based on 3 or 4 pillars. First one is the anti-money laundering authority, the new EU anti-money laundering authority. The second one is the rule book. The third one, the new EU directive that will replace the current 50 directive. The last one, the transfer of fund regulation and revision, in particular to the crypto asset transfer. Each of one of these topics arise from some specific needs and weaknesses, in my opinion, of the financial system, and from some specific need arise from banks and the financial intermediaries. For example, where does the need for a new European anti-money laundering authority come from? To be honest, the answer is really easy. It's not so complicated. At the present, an international group like Deutsche Bank, operating in multiple countries in the euro area, and is subject to anti-money laundering supervision of many authorities, and the approach used for inspection, sanction, recommendation, remediation plan is completely different from a regulator to another one. At the moment, in large international banks, duplication and the workload due to differences in local regulatory compliance processes need to be considered every month, every single day. In a nutshell, in a continuous basis, international bank like Deutsche Bank face conflicting operational processes due to different local versus group regulation. For example, the customer processes, the U-by identification, the client risk rating calculation and methodologies. Last but not least, normally internal control functions are asked to handle several activities, managing requests for information and data coming from several supervisory authorities. Of course, all of these mentioned authorities need to be informed, updated around the relevant data and the process in our space, in anti-money laundering space. The new authority, the new anti-money laundering authority, that is one of the pillars of this new regulation, will base its supervisory activity on a framework that will be shared at a European level. The new framework has already been designed, and finally, the main factor of concern of an anti-money laundering managers, including, of course, myself, the regulatory arbitrage will be reduced. This is for me and for anti-money laundering risk officer a sort of a nightmare in a group like Deutsche Bank or other international group as UniCredit or São Paulo, so on. To be honest, thinking that the crime organization has not been able to use the regulatory arbitrage between various countries over the year is not reasonable. In my experience, about 35 years in anti-money laundering space, what I have always highlighted is that the crime organizations use regulatory weaknesses and the regulatory difference between various regulations. The provision and the regulation between Italy and Germany are completely different at the moment. Completely different. It's also important. I believe that it's important for this audience to report some example starting from Italian regulation, showing you how it's not find a similar rules in other international provision or law or regulation. For example, since 1993, one of the pillars of Italian legislation has been the Archivio Unico Informatico. That is a sort of a mandatory database, a data warehouse, where all the information on customer transactions and their relationship is collected. This pillar is only Italian, and I do believe is something similar in Spain, but certainly not in other country, not in other regulation. As an AML manager, I have to take care of this database, this archive, its feedings, the correctness of the data. And this is a clear example of regulatory difference. Furthermore, transaction monitoring system, that is a tool or a software that normally the financial intermediary use for suspicious activity report, in Italy have long been based on data contained in this archive, in this mandatory database. And normally, Italian bank, Italian financial institution use this database for risk profiling and alert generation, as I mentioned before. Another good example of the operational impact on fragmentation of regulation are related to the UBO identification and criteria used for UBO identification. In Italy, for example, one of the criteria related to the identification of the UBO is also based on the presence of reliable and independent sources which certify in a way or in another the correctness of the identification. After that, the ownership chain has been completely analyzed and identified. Therefore, the relationship manager in Italy cannot rely on the declaration of the client. This principle, this pillar that represent one of the basic pillar of the Italian legislation is not always adopted in other countries. And therefore, we require additional effort from the customer to be compliant with the local legislation. Finally, the landscape of suspicious transactional report also appear very different in Italy and in other countries, starting from the number of the report. In Italy, there are approximately 150,000 per year, which is among the highest in Europe. Also consider the criteria for the identification of them and the rule of the field of our financial intelligence unit. All mentioned issue and aspect should be considered a peculiarity of the Italian landscape, the Italian regulation. Our field is a part of our regulator, is a part of a Bank of Italy, our financial intelligence unit, and now focuses its attention on complex anomalous pattern, asking bank to consider sophisticated algorithms and models among the scenarios. And for this reason, a couple of minutes ago, Andrea asked for a new threshold on the cash transaction. In Italy, we use a limit and a cash on the cash starting from 1993. We have in other country, it's important to consider that some countries do not have any kind of limit, any kind of threshold in the cash transaction. Last year, in this required, in this landscape, it's important to consider that our financial intelligence unit published 200 different scenarios regarding money laundering pattern, asking the bank and other financial intermediaries and an institution to implement this new scenario. And to be honest, 95% of this new alerting and this new scenario are not based on a cash transaction, considering our limit and our threshold. And another important point, and to be honest, I am Italian, bearing in mind that our financial intelligence unit was established among the first in the world, I believe that it can be considered the model to follow in terms of operational impact, in terms of model, in terms of experience and knowledge. The need for a new authority, I believe that arises from the mentioned consideration and the issue. And to be honest, I hope that the new authority will be based in Italy. Andrea, the floor is yours.
Sorry. Okay, now you can hear me. Thank you. I was saying that you just
keep a finger crossed for the new authority.
I mean, I hope that the seat of the authority will be Rome, will be Italy, and we're gonna know that in a couple of weeks, because the 22nd of this month will be the D-Day. No, I was just saying that we are far from having an effective regulatory framework. So basically, what you said, I'm trying, to summarize what the
absolutely.
What the message is that, okay, guys, we do have a problem. We do have a problem, especially when we have banks operating across border fashion. So when we have like big players in the market who are operating in one country, another country, because every country has its own standards, the practices are different, the financial intelligence units are different entities. At times they are associated with the prudential supervisor, at other times it's connected to the police. So it's a crazy system. So in light of that, how is the European Union reacting? So how is the European Union trying to overcome the problems? With the, let me share the screen again. With a big reform, that is the so-called anti-money laundering package. It's a package, in fact, because it encompasses actually 4 different actions, 4 different initiatives. The package was issued by the European Commission the 20th of July 2021. It was very ambitious because, especially for the regulation establishing the new agency, the new authority, the AMLA, the idea was to have this authority ready, established by the 1st of January 2023. And that's not the case, of course, even also because we don't even know where the authority will be located. So the seat is hasn't been decided yet, which is also, again, I think, indicating how complex is, reforming such a matter, such a topic. Anyway, the AML package is composed of 4 different initiatives. One initiative, one act is the enactment, the production of this regulation on anti-money laundering. So it means that the European Union, the first directive was 1991. So after 20-something years, decided finally to change the nature of the regulatory tool from a directive to a regulation, which is obviously a big step in the direction of harmonization and in the direction of overcoming these discrepancies and regulatory differences amongst the member states. The issuance of a directive, it's going to be the number 6, which is going to have a totally different scope than the directive we have in force today, because this 6th directive is not going to cover the AML requirements, but it's going to cover certain rules about the supervision, so the cooperation between the different national competent authorities and the FAUs, but it's not about the customer due diligence, the reporting of suspicious transaction, and so on and so forth. And then the regulation establishing a European supervisor, the so-called European Anti-Money Laundering and Anti-Terrorism Authority, AMLA in acronym. And the final initiative is the regulation on the information accompanying transfer of funds and certain crypto assets that you see highlighted in a different color because it's the only text that has been adopted. So it is, it has been enacted, this regulation, even though it's gonna enter into force in 2025. So 1st of January, 2025. Today, so here again, you have an overview of the different initiatives and also the state of the legislative process. As you know, in the European Union, the lawmaking process is triggered by the European Commission, who is the one preparing the proposal, and then the proposal goes onto the table of the Parliament and the Council. They make amendments and they make changes. Then there's this trialogue procedure where they discuss, and this is all about. They discuss indeed the content of the legislation. When they agree, we have the final text. So the trialogue started. Now we have a provisional agreement, very recent, of the dating 18th of January 2024, but we do not know yet when the final text will be released, will be published. So everything that I'm gonna say, of course, is still fluid. So it might be subject to changes, even though, I mean, the general idea, for example, the introduction of an authority is there. It's not gonna change. Yeah, one thing that I want to stress about this big reform, this big overhaul proposed by the European legislators is that innovation and technology advancement is one of the major factors behind the need to strengthen the current regulatory and supervisory framework. You see here, I just, this is part of the preamble to the package, when you see that the very legislator is saying the measures refine the existing EU regulatory framework, adapting it to the new and emerging challenges related to technology innovation, such as virtual currencies, the increased integration of financial flows in the single market, and the global nature of terrorist finance organizations. So these two things, on the one hand, the fact that the market is international, is global, so the natural operation of banks in a cross-border fashion, and the fact that we have new means to make transactions like cryptos that need to be taken into account. And here you have what I said is backed and reflected in a couple of other passages in the preamble of the package. So both from the institutional dimension, so the fact that we need a new institution, a new supervisor, you see the competencies of the authority in the area of virtual assets are coherent with the digital finance package. So the fact that this authority will take adequate care also of the challenges associated with virtual currencies, institutional dimension, but again, also from a substantive dimension. And by substantive dimension, I mean the AML requirements, the risk management, and all the precautions that are put in place to manage such money laundering risk. Technology keeps evolving, offering opportunities to the private sector to develop new products and systems to exchange funds or value. While this is positive, it may generate new money laundering and terrorist financing risks. So again, technology is a good thing, but the legislator most of the time looks at the cons, at the potential risk associated with this. Now, I'm gonna focus mostly on the AMLA, so on the institutional part of the reform, on the introduction of this new supervisor. But I also want to spend very briefly a couple of words on the substantive part. So on the fact, on the circumstance that the European legislator thought that it was essential to have a regulation regulating this matter rather than a directive. So the fact that we are passing all the content from a directive to a regulation, this circumstance, I mean, the effect, the consequences are pretty obvious, because as I said before, whatever is in a regulation can't be touched by the national regulator. So we are sure pretty much that there's regulatory harmonization and that there's consistency in the application. Okay, so somehow this is an answer to what Vincenzo said before, in terms of we have different practices in place, we have different interpretations of the legislation in each and every country. I mean, against this, the regulation is surely taking a step in the right direction. And, you know, out of the many topics that we can discuss about the regulation, about the substantive reaction of the European Union, I just picked one because it's actually one of the pillars or potential pillars I've been discussing at the get-go, at the beginning of this regulation. And in particular, the question as to whether we do have or we should have a limit to the use of cash. As I said, the current regulatory framework that is based on a directive is giving member states the freedom, the discretion to introduce a threshold to the use of cash. In Italy, we have a threshold. In Spain, there's a threshold. Germany doesn't have any threshold. You can buy a house, 1 million euro by cash.
I confirm.
Yeah,
absolutely.
No, thank you for the yeah, no, I know. But in fact, you know, here you see recital 94 of the proposal for a regulation on anti-money laundering is basically saying that's a problem, you know, that we are not agreeing on a common limit, on a common threshold on cash. So the new regulation is introducing a union-wide limit that is set at 10,000 euro. Now here it's this figure is actually the result of a lot of European, a series of case law of the Court of Justice and opinions of the European Central Bank, in particular examining what limit is the right one, the balanced one, to allow people to use cash nonetheless, but at the same time to ensure the integrity of the market. So this 10,000 euros seems to be the halfway happy solution to, you know, guarantee the freedom of people to use cash, which is a right, and at the same time preventing, you know, money laundering. So this regulation is finally introducing this threshold, which, by the way, could be derogated by governments. So even though there's this common threshold, every jurisdiction can decide to put a stricter cash limit. So if Italy decides to confirm 1,000 euro, 2,000 euro, whatever, can stick to that, even though we do have this somehow ceiling, which is we are sure that at least every country has at least 10,000 euro as a limit. Okay, now having said that, concerning the substantive part, so the fact that we do have advantages in passing from a directive to a regulation, which are very obvious, I want to say something about this new animal that is entering into this framework of many authorities we have in the European Union. As you probably know, at the European Union level, when it comes to banking and finance, we have the national competent authorities, we have the European Central Bank that is a monetary policy institution, but at the same time also a prudential supervisor in certain circumstances. We have the EBA, the European Banking Authority. I mean, it's really a constellation of different authorities. And now we have a new agency, the AMLA, so the Anti-Money Laundering Authority, which, by the way, is reflecting, is somehow resembling pretty much a framework of supervision that we do know already at European Union level. I'm referring in particular to the single supervisory mechanism, the SSM, so prudential supervision of banks. Why? Because, as you probably know, when it comes to prudential supervision in the Eurozone, so in those countries that adopted euro as the currency, we have a framework of supervision where there's the European Central Bank as a sort of leader or coordinator of this scheme, and then the national competent authorities supporting the ECB. And within this context, the ECB is directly responsible for the supervision of significant institutions, significant credit institutions, and national competent authorities that are responsible for the small players, or let's say, yeah, the less significant banks. This idea is underlying, give or take, the introduction of the AMLA, because introducing AMLA is not only introducing a new authority, it means introducing a supervisory system. You see that in the title. I have quoted AML CFT supervisory system. There's a specific article in the regulation establishing the AMLA that, in fact, it's Article 7 that says, look, we are establishing a framework of supervision where the AMLA plays a specific role. Okay, so you have to take this broader perspective where you have, of course, this centralized European supervisor, but also supported by national competent authorities. And like the SSM, we have this distinction between certain entities that are directly supervised by the European authority, by the centralized authority, and other entities that are remain supervised by the national competent authority. Here, the distinction is between selected obliged entities and non-selected obliged entities. Selected obliged entities, so those who are subject to the supervision of the new AMLA, are high-risk cross-border credit and financial institution with activity in a significant number of member states. And in exceptional cases, any entity whose material breaches of applicable requirements are not sufficiently or in a timely manner addressed by its national supervisor. So as you can see, the emphasis is on the cross-border activity of the entities. So here, the legislator is not talking about the asset side, is not talking about the volumes, is not talking about other, quantitative criteria. Is talking about how many countries the entity is operating in. If you're operating in many jurisdictions, it makes sense to pass these supervisory powers into the hands of these AMLA. And consistently with this view, the non-selected obliged entities remain primarily supervised at the national level, with national competent authorities retaining full responsibility and accountability for direct supervision. Nonetheless, the authority is by authority, I mean the AMLA, this European Authority on Anti-Money Laundering, is still playing a fundamental and essential role, because it has to ensure that the supervisory culture, that the supervisory practices are harmonized. So every national competent authority is in fact applying, and it is carrying out supervision in the right fashion, in the right way. So in fact, even though these non-selected obliged entities are supervised by the national competent authority, we can say that the AMLA is behind the scene coordinating the work of the national competent authority. Now, very briefly, the legislation is very technical. And I made already a selection because it's quite complicated. But I wanted to share with you the selection of the so-called selected obliged entities. So how is what are the entities that will be directly supervised by these AMLA, by this anti-money laundering authority, where there's a procedure to be followed in order to select these entities that is based on 3 steps. So the first step is to identify the obliged entities. So for the purposes of carrying out direct supervision by AMLA, the same authority should carry out a periodic assessment of the following obliged entities: the credit institution that are established in at least 7 member states, and any other financial institution that operate in at least 10 member states. So again, the starting point is that we look at the cross-border activity of those institutions, credit institutions, therefore banks, or any other financial institution, investment firms, any other financial institution. After that, so after selecting the entities that operate in different countries, in more than a certain number of countries, what we look at is the risk profile of those. AMLA will appraise, will assess, will examine the risk profile of the assessed entities, categorizing them, classifying them into low, medium, or high, okay, against a number of benchmarks, okay? So there will be some yardstick, some criteria against which to say, okay, this entity has a low profile, medium risk profile, etc., etc. The categories are the following. It's pretty obvious. I think it's sensible. The type of customer, the products, the services provided by the entity, the transaction, the delivery channel, the geographical areas where the entity is operating. Of course, the criteria and in particular, the methodology will be further developed and detailed by the same authority by means of the technical standards. As we will see in a few minutes, this authority is not only a supervisor in a technical sense, so it's not only enforcing the application of the legislation, but it's also a regulator because it contributes to the development of the technical standards by preparing the so-called draft regulatory technical standards, so advancing what is written in the regulation. And the last step in determining the selected obliged entities is to identify those credit institutions that have a high inherent risk profile in at least 4 member states and that have been under supervisory or other public investigation for material breaches of EU anti-money laundering legislation. And the same more or less goes for financial institutions. So here, anyway, the point is that this assessment is based on the cross-border operation, the risk profile, and again, only those entities that have a high profile in a certain number of countries, of member states, will be subject to the direct supervision of the AMLA. I'm going quick here just to say that it is possible for the AMLA, so for the European authority, also to take over direct supervision of non-selected obliged entities. Therefore, entities that are supposed to be subject to the supervision of the national competent authorities could be supervised by AMLA in certain cases, in particular in certain emergency situation where the national competent authority is not acting properly, okay? So imagine that the national competent authority in Italy for anti-money laundering, that is the Bank of Italy, is not properly ensuring compliance of a certain bank. The AMLA approaches the Bank of Italy, scolds the Bank of Italy, asks the Bank of Italy to remedy this. It doesn't happen, so the Bank of Italy stands still. The AMLA can bypass the national competent authority, can take over direct supervision of the bank. We have to pass from the commission, but the idea is that in this case, the AMLA is, you know, remedying a situation where the national competent authority is demonstrating not to be particularly prompt, not particularly careful in carrying out its own tasks. What kind of tasks or powers does the AMLA have in relation to selected obliged entities? Let's say the supervisory tasks. So the goal is to ensure compliance with anti-money laundering requirements, carry out supervisory reviews and assessment to determine if the entity is complying, you know, with the legislation, developing and maintaining up-to-date system to assess the risks and the vulnerabilities of the selected obliged entities, the traditional tasks that the supervisor is conducting in relation to the supervised entities. But, and of course, in order to make those powers concrete, effective, and real, the AMLA is endowed also with other powers concerning the possibility to adopt administrative measures, but also the possibility to enforce through the adoption of pecuniary administrative sanctions. So it has investigative powers, it can ask for information, it can carry out general investigation. It can, of course, also make on-site inspections like a national competent authority. It can ask, in terms of supervisory powers, to strengthen the AML policies, mechanisms, measures that are in place in the intermediary. It can request the entity, the intermediary, to restore compliance. It can even require changes in the governance structure, so it can step in the corporate governance of the entity, you know, really asking for some material change in the conduction of the business, and so on and so forth. And also quite important, I would say, I'm going quick because, of course, I just want to give you an overview without, you know, focusing too much on the details. But I think it's important to know that this authority, being fully fledged as a supervisor, will be also provided with the powers to impose sanctions. Okay. And here, of course, I will then share the PowerPoints if you want to go through. And here it explains what is the procedure to impose sanctioning power.
Yeah, if I may just ask a question.
Sure.
Because your presentation mentions credit institutions and financial institutions subject to this new supervision. What about crypto assets, and how does the AMLA relate to these new means of exchange?
Thank you very much. So, as I said at the beginning, the package is also justified. So the reform is justified also by the challenges of financial innovation. And in fact, I have to say, providers are obliged entities and might be subject to the supervision of AMLA. We don't have the final text. I told you that is still, the legislative process is ongoing. The first version of the text, so the one coming out of the European Commission, was referring to financial institution as a broad category encompassing everything that is not a bank. And it was specified that in this residual category, it was incorporated also crypto assets. The Parliament and the Council, however, they suggested to break down this residual category financial intermediary Also because each financial intermediary is different in terms of business model, in terms of risk. I mean, a crypto asset service provider is different from an investment firm, is different from an asset manager, is different, you know? So, and I totally agree that this is a great idea. And in fact, the last version of the text is disentangling the different actors of the financial sector, also and somehow pointing out that crypto assets and crypto asset operators, so crypto asset service providers in particular, need to be accounted as a single independent category where AMLA might have direct powers of supervision.
Amazing.
Then just to close on the powers of AMLA, besides the direct supervisory powers, which is a big thing, of course, because we do have a European legislator, a European supervisor agency that is able to approach directly the players on the marketplace. It's also quite important to stress that the AMLA has important powers in relation to the national competent authorities and with respect to the financial intelligence units. And in one word, what is the nature of the powers concerning one and the other? In one word, the nature of this power is to facilitate coordination, cooperation, and exchange of info, and also developing a common framework, so developing a common way to operate, because as we said, today, everybody is using a different approach. So these powers that seem to be like on the side, seems probably less important than the direct supervisory powers, are actually extremely important because they are integrating the framework by making sure that the national competent authorities on the one hand and the financial intelligence unit talk the same language. So they have the same understanding of this complex phenomenon that is money laundering. Finally, the last thing that I want to say about AMLA, which is also an important power, I mentioned it briefly before, AMLA is also a regulator. And why is this important? Because AMLA will develop standards, technical standards that will be immediately applicable, okay? AMLA is not a regulator, technically speaking, because they're just, you know, to be precise, we need the commission to endorse those technical standards, but what matters is the substance here, that we do have a regulator who knows, technically speaking, the matter, that creates technical legislation, technical regulation that will be immediately applicable. So no possibility for member states to change what's written in those technical standards. Okay, and now I pass the floor back to Vincenzo.
Thank you very much. Thank you very much, Andrea. It's important, for the sake of time, of course, I try to summarize some important issue related to the operational impact of this new framework. A number of operational impact are significant, and the effects of this new framework are already starting to be seen today. Many intermediaries, many international banks have moved from decentralized approach to centralized approach, which concern several aspects of the monitoring and control on anti-money laundering space. While waiting for all the regulatory aspects to be clarified, the bank have stressed and implemented a new exchange of information and data with the headquarters, between branch and subsidiary and headquarters, proceeding with the preparation and standardization of reporting related to 3 or 4 important topics. The first one, the transaction monitoring alerting. and the procedures, the procedure related to the risk rating methodology, the procedure related to risk appetite framework, the procedure related to identification of criteria and the identification of a deeper risk factor, and from a general point of view, all the procedures related to know your customer policies. From a general point of view, the bank and in general the financial institution should prepare, if you look at the slide number 4, for a more noticeable supervisory presence, need to adjust internal procedures in terms of operation and the process and the rules related to anti-money laundering space. Of course, adjusting their budget, changing the application of due diligence measures, including a more detailed requirement for customer due diligence and for enhanced due diligence, increase the information collection and compliance requirement for specific transaction. In relation to the first bullet point, there is a room for a new regulation, of course. Criminal organization know very well how to recognize opportunity for opacity, and the world of virtual currencies is still able, unfortunately, to ensure this. The regulator will soon have to issue new standard, and the intermediary will have to adopt them. From operational aspect and the perspective, we cannot only think about the de-risking approach procedures. We must invest in technology and be ready for modern challenges. In my opinion, in this space, the artificial intelligence tools and artificial intelligence methodology could play an important role in this space. Of course, large intermediaries that will be subject to this new framework, the new supervision, already adopt a common standard in different pillars, in different space. For example, we are present as a Deutsche Bank in the world of corporate bank, the investment bank, and in the multi-jurisdiction adoption space. And of course, we adopt a common onboarding standard and the regular review practice as a standard process group-wide. Of course, once again, taking into consideration different peculiarities coming from different rules, a different space. The TP Group is a systemic bank, and the regulatory buffing has long since request great oversight on all subsidiary and all relevant branch. One of the pillars of this new regulation, as I mentioned before by Andrea, is of course the risk assessment. We have reported in this slide the focal point. Of course, we need to consider the customer risk, the product service transaction, the geographical risk, and the delivery channel. But it's important what I reported in the last slide of this presentation. There is a sort of takeaway. What is for me and the most important topics, the most important issue coming from this new framework or this new regulation? Follow the risk. We need to use a reasoned and a reactive approach to identify concrete risk. We are asked to use a power of data in terms of data analysis and data analytics in order to be ready for the new challenge of the new anti-money laundering authority. And then, last but not least, this new authority will ask us to be a new approach with an increase of effort in different fields of the anti-money laundering space. And for this reason, the bank in all the jurisdiction in European space will be asked to invest in knowledge, skill, and probably IT. I hand over again to Andrea for the final conclusion.
Thank you, Vincenzo. I'm just endorsing what you just said. In particular, no, but because I think that in particular the last words that you said in terms of the need, to equip ourselves with new expertise and knowledge. And actually, I'm telling my students this. That anti-money laundering is becoming more and more demanding, and we need people to know how to navigate this very crazy regulatory framework now with this new authority and now the regulation, and also to handle all these the reporting, etc. With awareness, So I totally agree with you that this is a critical element of everything.
Andrea, to be honest, in the last 2 or 3 years in my department, I have hired 3 or 4 data scientists in order to detect through the data mining techniques a new emerging risk, in order to be ready for the new challenges coming from the new regulation.
Yeah. I know.
This, I'm sorry to interrupt. Just
sure.
we have a question at the chat that concerns exactly this, the timescale for introduction of this new regulation and the enforcement, because this all will take time, considering all the changes you've mentioned. So is there a timescale already?
Yeah, I mean, there's a time frame, and also the regulation, as I said, was very optimistic at the beginning with the AMLA being established 1st of January 2023. Establishing the AMLA, then in order for the AMLA to be up and running, there were like 2 years just to hire people. So imagine like 2 years from 2023 till 2025 to get resources. So imagine how big this animal is gonna be. Yeah, but everything is pushed back somehow. As I said before, the seat of the AMLA will be released 22nd of January, and of course, we as Italians, we are ready with the Prosecco, to to celebrate, because of course we are keeping our fingers crossed to be for the AMLA to be seated in Rome. There are other good candidates, Frankfurt, Madrid, Vienna, and Paris, etc. So we will see where it's going to be, but for sure it's a change in the financial landscape that is making history. Also because, I mean, anti-money laundering is not like a silo without any connection with the rest of the financial system, right? So it is somehow changing our understanding of financial legislation, financial supervision. So it will ask a lot of, efforts in learning for all of us as well, not only for the new generations. And
absolutely, I confirm that the challenge is for all of us, that we are that we normally work in this space, and in my opinion, the anti-money laundering new authority will start from operational level in 2026, I believe.
Yeah, just one word, if I may. That this is another one example in European Union is very often like this of a scandal-driven legislation, because I mean, we had a couple of big scandals taking place at the European Union level that showed that indeed the current regulatory framework is not the right one. And in particular, I'm referring to the scandal that hit Danske Bank, that is the biggest bank in Denmark. So Denmark, that is, the country of integrity, and actually it's funny because when it happened, I was working as a professor in Denmark, and I've been involved as a consultant in that situation. And it's a situation of a bank with branches and subsidiaries in other countries, with a cross-border operation, also with third countries, because it involved Russia and other countries. And so before such, big scandal, the European Union needed to react. So again, most of the time, EU financial legislation is the result of something that was not functioning well, resulting in a big scandal, prompting regulators to reform deeply the institutional and substantive framework. I don't know if it's going to be enough, but for sure it's an important step. Sorry, go ahead.
No, if I may, Andrea, I do believe that is also the response to the robustness of a U.S. authority on anti-money laundering space is the right response, because at the moment in the world we have from one side the U.S. authority, FINS and DOJ and the other anti-money laundering authority active in this space, and from the other side, from the European side, at the moment we don't have an authority that comparable with the USA authority. I believe that is the right response.
Yeah, absolutely. Yeah, and it's in the direction of the European Union, to
absolutely, yes,
agencyfication, Europeanization, and as I said before, not only in banking and finance, but in particular in banking and finance, we have many powers and many institutions, many agencies, so different layers that are bringing all the powers to the center, and we were lacking this in the anti-money laundering legislation.
So we are 10 minutes in overtime. I believe it's the moment to close the webinar.
Yeah, sorry for taking long.
Will punch us in the face. I just wanted to open the floor if any questions. I just saw one in the chat, but if anyone wants to ask anything else. No, I don't think so.
I do have a question.
Okay.
Another question. I know, and we are over time, but there's a huge amount to pack in. So, gentlemen, thank you so much, because and I know even then you've been summarizing the summaries. You touched on AI. Regulation, not just in banking and finance, but is becoming more complex. Some would say more onerous. In all areas of our lives, and there's obviously a need for it. What role do you think AI will play in AML going forward, and in AML? Is it just going to facilitate reporting and recording, or do you think there can be something more constructive?
Andrea, rispondi tu e poi come vuoi.
Okay, yeah. I can go first, and then if you want, I think it's gonna play an important role for sure, not only in an AML ambit, but in general in all our lives. For sure, for reporting, it's gonna play an important role. What is important when it comes to reporting is not only to be for the reporting to be prompt, but also to be reliable. So we want the info to be reliable. That for sure. I mean, are you communicating to the FAU something that is anomaly, something strange, or just because you want to show to the authority that you are good and you just So I assume that if you use AI in the right way, you can probably strike this balance between speediness of the reporting, but also reliability of the info. So you really are informing the FAU about cases where there's some doubt, some element about the strange behavior of this person vis-a-vis the standard that you created through the customer due diligence. That's the important thing. It's important really, to create an integrated system where all the pillars are working together. So the reporting of suspicious transaction is based on customer due diligence, because it's the standard of behavior you expect from your client, okay? So I hope that the artificial intelligence is smart enough to get that in the right way. Yeah? So that's what I think. But probably Vincenzo knows better.
Absolutely, I confirm. The financial institution and the banks here in Italy are starting to use the artificial intelligence on the transaction monitoring space in order to detect suspicious transactions. And then, of course, there's a suspicious transaction detected by artificial intelligence are analyzed in detail by the relationship manager. But one of the space where the bank, the financial institution are using the artificial intelligence is in transaction monitoring in order to identify, to detect suspicious activity report. And I believe that will be the future, considering also the digitalizations, considering also that several transactions are performed in virtual space, and step by step will move from know your customer to know your transactions. This movement between two different space, know your customer to know your transaction, probably will be followed by using artificial intelligence system and procedures.
Okay, I hope this answered Keith's question. I thank you both for your time and for the brilliant presentation and everyone who joined. And I hope to see you in the next Banking and Finance webinar.